Good day, everybody. It's Trent Klarenbach with the Klarenbach Grain Report. Today is December the 15th, 2025. Let's take a look at canola. Canola has been in a sell-off the last 3 weeks on this weekly chart. You can see the 3 red candles. Now, hopefully you remember we had ideas to ladder sales between 638 and 658 on the nearby futures. So that probably played out not too bad. We got actually a high of 658.80 on the futures. So if you did that laddering from 638 to 658, you're probably feeling pretty good about your situation right now that the price has settled down, or not settled down, but it's pulled back to around that 615, 16 or dollar level here today. That's the weekly chart. You can see how this green 50-week moving average certainly acted as resistance, and it often does that. It acts as a resistance or acts as support. I'll just turn this. Yeah, so I got a dirty chart here again, but just a rehash. So we had ladder sales between 638 and 658. That's following our head and shoulders measured move that we identified maybe this spring, this summer. And down here at 605 and got actually down to 596, but the weekly close was not below 605. So that's what we look at. The weekly close matters more than the daily. Right now, this is a daily chart. It looks like this gap has been filled back here, this gap on October 7th. So maybe we start to see a rally here. I don't think it's quite over yet. I think we're going to come back down and get to 612 before we find any sort of support. But this is certainly a bearish chart pattern, and it's pretty dirty, of course, but let's just maybe clean it up a little bit. You can see we're below this 50-day moving average. It's starting to flatten out. We want to be above a rising 50-day moving average, not below a declining. We're below a declining 200-day moving average, and that old saying, nothing good is expected to happen below a declining 200-day moving average. So nothing good is expected to happen below a declining 200-day moving average. So it's very difficult to be optimistic or bullish canola. And maybe we find a rally from this gap now that it's close to being closed. But I just fear that if we get below 600, then our next level is 580, and then below there, we're just not sure how much further that can go, but it can go a lot further than you anticipate. So I'll just turn this on again. I got some trend lines on here. I got this trend lines, and it goes back a long ways, probably in the monthly chart. Yeah, back to 2006. So, that's sitting right around 580. So we could come down, test this long-term, this 20-year trend line. We got this 20-year trend line in yellow here going back to 2006. So that's a 20-year trend line. We've tested it maybe 3 or 4 times. If we come down and test that the next couple of months, that's around that 580 level. So maybe perhaps we find some support there along with this 200-month moving average. But I feel that 580 is going to be acting as a target. This is our Klarenbach price index for Saskatchewan. And this here is the weekly chart, in each candlestick charts. I'm not sure anyone else is using candlestick charts in this manner, but we do because we find there's more information with the candlesticks than the line charts. So right now, again, last 3 weeks, 3 nasty, certainly 1 nasty red candle. We're trading back below that 10-week moving average. We get bullish above a 10-week, and we are bearish below a 10-week moving average. This trend line here, hopefully it acts as some sort of support, but it looks pretty, like there's very few reasons to be bullish canola at the moment. Let's look at our basis chart, and I'll put the line chart on here so we can see it better. But the black line is our basis index. The red line is the 10-week moving average. And this green line, let's just clean this up here a little bit. Let's get rid of those moving averages. We don't need them on there for this analysis. But take a look at that. The black line is the basis. The green dashed line is the price path idea that I shared with you quite some while ago, probably a couple months ago. This is an ABCDE pattern that's forming a wedge. Now, what often happens is we get a rally above this upper trend line. We come back down and test this trend line before we move another move higher. Doesn't have to happen, but that's something that we look for and we are anticipate, and we're not caught off guard if it happens. Now, I got this Fibonacci retracement levels in from, and it doesn't line up with the lines on the chart, the line chart, but it does on the candlestick chart. And why is that important? Take a look at this. And again, I don't know anyone else who's charting Saskatchewan basis like this. Now, you're likely just us who is doing it, but take a look at how these Fibonacci levels have been very important throughout the last 20 years of this price chart or the basis chart. So you can see why I anticipate a rally up to this 50% retracement, the negative 32 level, back down to here with this alignment and confluence with this trend line and the 38.2% retracement, and maybe another rally. We look for clues to what might happen, and we use various indicators to come up with those ideas. So stay tuned. I do see an improvement in the basis as probable, and that should reflect in the canola price. My name is Trent Klarenbach. It's sunny in Saskatoon. Life's good.